Tesla stock analysis. If you had shorted Tesla stock 1 year ago today, you would be down a whopping 4 times your initial investment. Tesla stock hit all-time highs last week and actually breached the crucial psychological level of $1,000 per share. Tesla might soon dethrone Toyota Motor Corporation as the most valuable car manufacturer in the world. As of June 12, 2020, Tesla is worth a staggering $173 billion. This actually makes Tesla worth more than Honda Motors and Volkswagen combined. Even though Tesla does not sell nearly as many vehicles as these other companies, I think that this high stock price is warranted as they have a wealth of patents and intellectual property that will serve as competitive moats for years and years to come. Today on 9 to 5 Investing, a YouTube channel where I talk about today's game-changing stocks, I'm going to tell you why I think that Tesla is still worth buying at an incredible $1,000 per share.
9 to 5 Investing.
Tesla first IPO'd on June 29th, 2010 at just $17 per share. I really want you to think about this for a second. If you had invested just $1,000 at the IPO price, you would have about 58 shares of Tesla. If you just simply did nothing with that investment, you would be sitting on about $58,000 as of today. But let's just think about this a little larger like we like to do on 9 to 5 Investing. If you had just invested $17,000 back in 2010 during Tesla's IPO, you would actually be a millionaire off of that investment alone today. It does us very little good to daydream about something that we did not do or something that we cannot change. However, I do think that this occurrence can teach us a very important investing concept, and that concept is the power of buying a game-changing company like Tesla and just never selling it. Tesla has just come so far and overcome so much execution risk, especially from a mass production perspective. And with Tesla's move into several new markets, including the semi-truck market with the Tesla Semi, the electric sports car market with the Tesla Roadster, and the pickup truck market with the Tesla Cybertruck, it seems like Tesla could just be getting started with their broad mission of making consumers and businesses more eco-friendly and look pretty cool doing it. So today I'm gonna break down my top 5 bullish points and my top 5 bearish points about Tesla stock in 2020. Now, let's just get into those bullish points. Bullish point number 1, Tesla has meaningfully differentiated itself from the competition in terms of its battery technology and will likely vertically integrate their production process and make their own batteries in the years to come. Tesla is committed to differentiating themselves from the competition in so many ways, and one of these ways is with their battery technology. If you follow Tesla stock, you probably already know that Tesla acquired Maxwell Technologies, a manufacturer of ultracapacitors that also has some pretty revolutionary battery technology, for about $218 million in an all-stock transaction in the second quarter of 2019. Interestingly enough, Musk has commented that Tesla was not all that interested in Maxwell Technologies' main business at the time, which was the production of the ultracapacitors. Elon Musk specified that advancements in lithium-ion battery technology have made it to where the ultracapacitors are not really needed anymore for electric vehicles. Musk has also commented that one of the main reasons for buying Maxwell Technologies was for their dry electrode battery technology. Basically, this dry electrode battery technology can increase a battery's energy density. So right now the current bottleneck is about 300 watt hours per kilogram, and the dry electrode battery technology could take this to a new bottleneck of up to 500 watt hours per kilogram. Basically, if all goes as planned, Tesla vehicles will get much better range with this dry electrode battery technology. Currently, the long-range version of the Model S can go up to 370 miles on a single charge. Now, I'm an accountant, not an engineer, but if they're able to increase the energy density of their batteries all the way from 300 watt-hours per kilogram to 500 watt-hours per kilogram, it seems like that would mean the Tesla Model S would be able to go a max range of 616 miles. Japanese engineers have actually expressed that they believe that Tesla's battery technology is about 6 years ahead of any of their competitors. Many analysts have speculated that Tesla is setting themselves up to basically produce their own batteries, unlike most electric vehicle manufacturers that just outsource this work. This move towards vertical integration would really help Tesla have complete control over the quality of their batteries and also help them lower their costs overall. The acquisition of Maxwell and their dry electrode battery technology has helped Tesla stay several steps ahead of their competitors in terms of battery technology, and this will likely serve as a significant competitive moat in the electrical vehicle market for many years to come. If you are enjoying this video so far, please smash that like button like I smashed this broken TV that I bought for $10 off of Craigslist in a potentially unconvincing attempt to convince you to smash the like button. Doing this small action really helps me grow my channel and reach more people and pursue my passion, so it means a lot to me. Thank you. Bullish point number 2. Tesla is ready to mass produce their semi-truck. The mass production of the Tesla Semi is a tremendously bullish point to me. So in some of my other videos, I have covered the Nikola Motor Company's semi-trucks that are powered by hydrogen and electric motors. And after doing more research, it turns out that the Tesla Semi is actually the most cost-efficient model of semi-truck, and that's including the hydrogen-powered Nikola Motor Company semi-trucks and the traditional diesel fuel trucks. Per recently compiled data from the truckersreport.com, it costs about $1.58 per mile to run a traditional diesel fuel truck. In Elon Musk's 2017 presentation of the Tesla Semi, he explained that a traditional diesel truck costs about $1.51 per mile to operate. I believe that the slight variance between the truckersreport.com estimate and Elon Musk's estimate of what it costs to run a traditional diesel semi-truck per mile is mostly just due to changes in the cost of diesel fuel and maybe some basic assumptions around how much does it cost to maintain and repair a diesel semi-truck. Regardless of whose estimate is more accurate, here's what really matters. The Tesla Semi costs $1.26 per mile to run. Yes, you heard me correctly, $1.26 per mile to run that Tesla Semi. Big corporations that drive hundreds of thousands of miles across the country each year transporting their goods will actually save a ton of money by going with the Tesla Semi truck instead of a traditional diesel fueled truck. Which is actually kind of crazy to think about, because would you rather drive this bad boy or this? I think that the decision is pretty easy, especially when you consider the fact that Tesla is the leader in artificial intelligence technology for self-driving vehicles. Now, the self-driving technology is not 100% autonomous or perfect yet. I think that having this artificial intelligence technology in these semi-trucks will be an absolute game changer, because in the United States, these semi-truck drivers are allowed to drive up to 70 hours per week, and driving up to 70 hours per week is inevitably going to make them fatigued, and being so tired inevitably leads to accidents. And this artificial intelligence that is built into the Tesla semis will actually help correct some of the potentially fatal mistakes that these drivers could make. For example, God forbid that a semi-truck driver is extremely fatigued from a long week of work and might fall asleep at the wheel, or might just be so tired that they swerve into other lanes. The artificial intelligence built into the Tesla Semi will then kick in and automatically adjust that semi-truck back into the proper lane, potentially saving the life of the driver and the lives of anybody in the way. Not only would the Tesla Semi save lives in the way I just described, but in addition to that, it would actually help cut the emissions that come from the traditional diesel fueled trucks that we have on the roads today. Tesla asserts that their Tesla Semi will run up to 500 miles on a single electric charge, and that they will also build these mega charger stations around the country that will basically be able to power the Semi for a 400-mile range with only a 30-minute charge. And don't make the mistake of thinking that the Tesla Semi is just some little side project for Tesla. This market is actually estimated to be worth, and this is from the Motley Fool, $240 billion annually. Make no mistake about it, once the Tesla Semis hit the road on a mass scale, they're going to be an absolute game changer and make Tesla and its shareholders a whole lot of money. Bullish point number 3. Tesla will release the first iteration of their Cybertruck in 2021, and there are already an estimated 535,000 pre-orders. I have always wanted the practicality of having a truck, but never seriously considered buying a truck just because of how much gas they consume. I am personally an avid user of Craigslist, and there have been many situations that I have been in where I have not been able to buy something that was physically large because my four-door sedan simply cannot handle the size. Given the fact that the Tesla Cybertruck can carry these Craigslist loads for me, and the fact that it runs off of electricity and optional solar panels that charge at 15 miles per day, this might actually just be the perfect vehicle for me. Tesla claims that with Cybertruck, you get more utility than a traditional truck with the performance of a sports car. I don't know about you, but that one-line marketing pitch actually makes me want to buy a Cybertruck on its own. And who knows, maybe if you light up that like button, it'll help YouTube spread this video and therefore my channel, and maybe one day I'll be able to afford a Tesla Cybertruck myself. To give you a little bit more detail, Tesla says that the maxed out version of their Cybertruck, the version with tri-motor all-wheel drive, will go from 0 to 60 miles per hour in just 2.9 seconds and be able to carry a load of up to 14,000 pounds. Ford sells hundreds of thousands of their F-Series trucks every year. A Ford F450 can go from 0 to 60 seconds in 8.3 seconds and carry a load of up to 35,000 pounds. Clearly, the towing capacity of the F450 is far superior to the Cybertruck, as it can carry the 35,000 pounds versus the Cybertruck's maximum of 14,000 pounds. But in my personal opinion, the average consumer is not going to need that full 35,000 pounds that the F450 offers. And I believe that the Cybertruck at 14,000 pounds will be more than enough. And on top of that, with the Cybertruck, you get that epic 0 to 60 miles per hour in just 2.9 seconds that the F450 just cannot even come close to touching. I believe that the design of the Tesla Cybertruck is going to be something that you either really love or you really hate, as it is really breaking from that traditional mold of what people are used to seeing a truck look like. For example, I really appreciate the design of the Tesla Cybertruck, yet my girlfriend believes that this design should have actually just stayed in Minecraft. Regardless, I believe that Tesla is going to sell a lot of their Cybertrucks. Bullish point number 4. On February 13th, 2020, Tesla raised about $2 billion in cash from a secondary offering, which puts them in a ridiculously good cash position. Normally, a secondary offering is a very bearish point because it dilutes current shareholders. However, I think this is a unique situation where this is actually a bullish point. So why is this secondary offering different than other secondary offerings? Well, the difference with this secondary offering is that Tesla stock was priced at $767 per share at the time of the offering. Although this share price does not seem high today, you have to remember that Tesla stock was priced at just $225 per share about a year ago today. If there's any time to dilute a stock, it is right after the stock has had a massive run, as management can fetch as much money as possible for those newly issued shares. If you do not already own Tesla stock, you could probably buy it now and not have to worry about a secondary dilutive offering for the most part. As of March 31st, 2020, Tesla has about $8 billion of cash in the bank, and they have now started to turn a profit, so it's very unlikely they'll ever need to do a secondary offering again. Now, do not get me wrong, I am not saying it is nearly impossible for Tesla to do another secondary offering. However, companies that are profitable year after year consistently usually do not do a secondary offering, and Tesla does have that $8 billion in cash I mentioned. I think that Tesla might finally be getting there to where they might have just year after year consistent profitability. And if that's the case, then I really doubt they're going to do another secondary offering. Bullish point number 5, there's strong demand for the Tesla Model 3, especially in China. Tesla recently lowered the price of their Tesla Model 3 in China to be eligible for new energy vehicle subsidies from the Chinese government. The price of the Tesla Model 3 in China was lowered by about $1,664 USD. This lower price made it possible for the purchaser of the Tesla Model 3 to collect a subsidy from the Chinese government of about $2,867 USD. Once Tesla lowered the price of their Tesla Model 3 and enabled customers to take advantage of this generous subsidy from the Chinese government, the demand for the Tesla Model 3 exploded. Tesla is now receiving over 1,000 orders in China alone, which is over double the capacity that they can produce in their Shanghai Gigafactory, which cranks out about 3,000 of these vehicles every week. Management believes that they can eventually get their production capacity to 4,000 vehicles a week, but regardless, Tesla has more demand than they can keep up with in China. A report came out that specified that Tesla's gross margin for the Model 3s in China is about 39%, which means that Tesla is very well positioned to make a ton of money selling these vehicles in China. Now that we've covered my top 5 bullish points about Tesla stock, let's take some time and talk about my top 5 bearish points about Tesla stock, which were admittedly pretty hard to come up with. But here's the thing, guys, I try to keep it balanced between a bullish and bearish perspective when I'm analyzing stocks here on 9 to 5 Investing. So let's just jump right in. Bearish point number 1, Tesla's co-founder and CEO Elon Musk tweeted on May 1st, 2020, Tesla stock price too high, IMO. This one honestly just makes me laugh. Why on earth would Elon Musk say something like this? I mean, at the end of the day, all this tweet really did was create a big internet buzz and make shareholders angry as they watched their net worth decline. Elon Musk's tweet made the stock price crash about $100 per share, but the interesting thing is, after that crash, it has actually uptrended to new highs since then. I think that this tweet that hurt Tesla stock in the very short term just really shows that Elon Musk does not care that much about money. Given the facts that Elon Musk is a co-founder of Tesla and the current CEO, you would have to assume he owns a lot of shares, and he does. He owns 38.7 million Tesla shares to be exact, which means if we assume that his tweet made Tesla stock drop $100 per share, it means that in the short term, he lost himself $3.8 billion. And the hilarious thing is, he just does not care. Regardless, I think that if a co-founder and CEO of a company is saying that the company is overvalued, then there's a good chance it could actually be overvalued. And before I make any big Tesla shareholders mad, I am talking about in the short term. I think that in 10 years, the current price of Tesla stock will almost certainly look cheap. But in the short term, the CEO of Tesla saying that the shares are overvalued just seems a bit bearish to me. Call me crazy. Bearish point number 2, US-China relations have the potential to get a lot worse given the entire global health crisis occurring right now. This bearish point affects entire sectors of the stock market, but I think in particular, Tesla will be affected if US-China relations sour. As I had mentioned earlier in this video, the demand for the Model 3 has absolutely exploded in China, and this success could be shut down in an instant if the Chinese government decided to do so. If relations between the United States and China got really bad, the Chinese government could theoretically shut down the Tesla Gigafactory in Shanghai and ban Tesla from selling their vehicles in China since they are a US corporation. In my opinion, there is a high chance that nothing will happen in terms of US-China relations affecting Tesla. However, something like this actually happening would be very, very bad for Tesla's business. Bearish point number 3. Competition will continue to grow in the electric vehicle manufacturing space. Many of the companies that produce the traditional internal combustion engine or ICE vehicles, such as Honda, Ford, and General Motors, have seen the success that Tesla has had with their premium electric vehicles, and they have decided they want a piece. One general rule of economics is that the more competitors there are in a market selling the same or similar product, the more that the price will be pushed down to a certain extent. Now, obviously, competition pushing down price does have a limit. It's not like if there are dozens and dozens of competitors, an electric vehicle is going to go for some crazy low price like $1. But regardless, having more and more competition is going to shrink those profit margins that Tesla or any other company selling electric vehicles is going to make per unit sold. Regardless, at this point in time, Tesla holds spots number 1 and number 2 for the top 5 best-selling premium electric vehicles in the United States. At this point, Tesla seems to have the premium electric vehicle market cornered. However, as time goes on, it is likely that more and more competitors will enter the market, develop their own proprietary technologies, and force Tesla to lower their prices, and inevitably this will shrink Tesla's profit margins in the long run. Bearish point number 4, the valuation. Now, I know I already mentioned Elon Musk's tweet about the valuation, but give me a break. It's really hard to find bearish points about Tesla. So for the 4th bearish point, I'm gonna give my own perspective on Tesla's valuation. In 2019, Tesla sold about 367,600 vehicles, and as of June 21st, 2020, Tesla has a market capitalization of about $185 billion. At the time of recording this video, Toyota Motor Corporation is the only car manufacturer worth more than Tesla. In 2019, Toyota Motor Corporation sold about 2,085,000 vehicles, about 6 times what Tesla did in 2019, and they're only worth about 1.24x of what Tesla is. Then if you take a look at Volkswagen, the numbers look a little wackier even. They sold over 6 million cars in 2019, yet they are worth less than half of what Tesla is worth. Now, the volume of cars is just one piece of the puzzle. There are a bunch of other things you must consider when valuing a car manufacturer, including proprietary technology, cash flow generation, profit margins, etc. However, taking a quick look at what each of these vehicle manufacturers are doing in terms of volume can give us just a quick look at the valuation and kind of show us that maybe in the short term, Tesla's valuation has gotten just a little bit ahead of itself. Bearish point number 5, the price of Tesla stock has already come so far so fast. Almost always, if a company that is not a biotech company quadruples in about a year or less, there's almost always some sort of correction. Now, to be clear, I'm not saying that Tesla is going to be going back to 200 or something like that. I think that the uptrend is very strong, but I wouldn't be surprised to see a retracement to maybe like $500 or $600 per share. Now, it is entirely possible that Tesla could just continue this impressive bull run all the way to ARK Invest's $7,000 per share price target, but odds are there will be some sort of correction at some point. It just happens with most stocks, no matter how great of companies they are. I find this correction for Tesla stock to be particularly likely, in my opinion, just because of the type of the market that we're in with the global health crisis, and on top of that, the potential deterioration of US and China relations. However, if you are looking to hold Tesla stock for the long term and just really keep that long-term mindset of 3, 5, 10 years of holding, and even more, really, Warren Buffett says that the best time to sell a good company is actually never. So if you're keeping that long-term mindset, I think that your investment in Tesla is going to be very profitable. So if you watched my last video, I talked about how I made about $4,000 trading the Nikola Motor Company stock, and I only traded the stock and made this money because I was trying to make that last video a little bit more interesting for you guys. and it ended up making me a really nice chunk of money. So I decided to reinvest those profits into this YouTube channel to make the content more interesting. And basically the big secret item that I was gonna buy, it's a flamethrower. If you notice at the beginning of the video, I had a flamethrower on my back, but it only had water in it. And the reason for this is because it came with a leak. And I'm currently coordinating with the company to get a replacement. And as soon as I get a replacement, you guys are gonna see that in the videos, but I just thought I would at least implement it with the water since that's safe. Safety is my #1 priority here on 9 to 5 investing. I would never wanna hurt myself or anyone else just to make a stupid video. But as soon as it's safe, there will be flamethrowers in my videos. So look forward to that, guys. So what will I be doing with Tesla stock? I actually want to be a shareholder of Tesla very badly. I will admit I'm actually feeling that dreaded FOMO a bit with this stock right now. But FOMO is not usually what makes you money, so I'm gonna see if the market will give us another crash at some point on this Tesla stock. What's funny is back in May of 2019, I was seriously considering going all in on Tesla and spending about 15K on shares that were priced at about 180 back then. I vividly remember sitting in the parking lot of one of my favorite Mexican restaurants, Pollos Asados, waiting for a pickup order and looking at the 15,000 or so that I had saved up and considering, should I put all of this into Tesla stock, which was crashing at the time. But none of these thoughts really even matter because I did not take the risk. I have absolutely no regrets though, because it is 100% pointless to think, what if, or I should have. Instead, it is much more constructive to think about what I can do today to build my wealth for the future. And what I can do in the present is basically buy a nice sized position in Tesla if the stock ends up crashing again. I plan on starting with just a couple of shares of Tesla, and if the stock continues to crash, I will buy more and more. But my next question is, what will you do? Did you already invest in Tesla back on that crash in May of 2019 where I failed to buy shares? Will you buy shares in the future? Let me know. If you enjoyed this video, commenting actually really helps YouTube spread my video and grow my channel. So I really appreciate every comment I get. If you enjoyed the video, please don't forget to smash that like button and subscribe to the channel. Really appreciate it. Thanks for watching and have a great day.
9 to 5 investing.